I'm back, and this time let's talk about what's happening in the real estate market right now. But first, I don't know if you ever watched Gargoyles, and you might be seeing the reverse of this, but did anybody watch Gargoyles? I showed this earlier, and this is this guy. I don't know, I don't even remember his name, but this was the pet of the main guy. Just picked him up at Target, not too expensive, and I was excited. Let's talk about real estate. Let's talk about what's happening in the real estate market right now. I've got two articles from you, one from Forbes and then one from CNN showing how the banking industry is saying we're going to shift into the next few months. And so the very first one is by Forbes. It's pretty decent. It gives you some good information. Follow along with me. Here's what it is. What's happening with the real estate market right now? And they tackle 3 to 4 things here that are important to pay attention to. Number one, interest rates are making mortgages seem unaffordable. Yeah, that's definitely across the board. For the most part, we are seeing that it's becoming unaffordable. We are seeing some things happen, though, that are being misinterpreted. And that's what I want to talk about a little bit, too. So hang in there as well. So you'll see what the misinterpretation is. Interest rates are making mortgages seem unaffordable. Here's what it is, the green area. With mortgage rates going up from 3% to about 7%. The monthly mortgage payments on the median asking price home has gone up 51%. Just so you put it in perspective here. Here's a great one. A mortgage payment of 1,000, let's average up, 1,700 is now 2,550 each month. That's a massive increase, right? Next one. Home prices are coming down. Hello, hello, by the way. Thanks for joining in. Home prices are coming down. Economists at Fannie Mae have predicted that real estate prices will drop by an average of 1.5% nationally. Now, that's not a lot in comparison to what some other people are saying. This is a pivot from the original prediction of 4.4% home price growth from about a year ago. And look, all across the board, you're noticing companies like Moody's and Zillow and Goldman Sachs throwing out numbers like 5% to 10%, so the average being about 7.5%. What I want you to pay attention to there is there's a difference in prices dropping and actual sale prices dropping. So people cutting prices and home prices actually dropping, and the amount of homes actually selling. There is a difference between all three. And I think when people in general hear, hey, there's just less activity in the real estate market, people instantly think home sale prices are dropping dramatically. And that's where I want to go in a little deeper and say, well, are they? Home sales are cooling down. Check out the green. This is from Redfin. This is research from Redfin. And they identified some important real estate figures that indicate how home price sales are declining. This is home price sales. So sold homes were on the market for a median of 33 days, up from 25 days a year ago. So some change nationally. New sale listings were down 19% from the previous year. Okay, that's a big number. 30% of houses sold went for above the list price, down from 45% a year earlier. What's up, Wallace? How you doing, buddy? And then lastly, which I think is the driving factor of everything, right? Here it goes. Mortgage applications were down 39% from a year ago. But with all of that, there's still one factor that economists, that the pros are looking at and saying, hey, this is all crazy and it's making a correction, but it's also preventing a crash. This one thing, right? And look, somebody's saying here, I'll put it up here so we can all read it, saying it's a struggle to find people come to open houses as well. And you know that is regional, believe it or not. In some open houses that we've held in some of the Western states, some of our open houses, we've had over 80 people just last week and the week before. So it really depends regionally. It depends on price point, right? And obviously it depends where the property is located. Agents' book showings are dramatically down here in Minnesota, depending on the area and price. Yeah, very true. Key factor there, depending on the area and price. Now, as we dig deeper into this, though, check this out. Will the real estate market crash? Which is a great question. It says, according to Google Trends, Search results in the US for real estate market crash went up 284%. So what's on people's minds? Is the real estate market going to crash? That is what is on people's minds. That's up in September, just last month. There are many people concerned about the possibility of a crash, as numerous people are watching to see how the economy reacts to rate hikes. And so far, it hasn't been good, right? We've seen that rate hikes haven't been good for us. Here's the last piece to this. It's really an indicator as to what we should really be focusing on, because we gravitate to one way or another. We either the sky's going to fall or everything's okay, right? But let's really look at this. Higher interest rates and overall uncertainty in the market make all of us nervous about the real estate market. It's difficult to determine what will happen next as we wait to see the results of these constant rate hikes. However, we know that the bidding wars seem to be a thing of the past as housing prices are slowly softening. And at the end of that article, there's another one I want to share with you. That one, it's like, well, we really don't know what's going to happen. And I love that outlook because it's on a day-to-day basis. We're seeing the Fed November 2nd, they're probably going to hike it up 0.75, 0.5, and that inevitably has some effect on real estate as well. So let's take a look at the second article because it also goes into what we should be looking at. Let me grab it and shrink it here for you because this one's called U.S. Bank Earnings. Oh, here it is. It's by CNN. You'll like them or not, it was a good article, so I want to read it to you. And here it is. Bank earnings reveal ominous clues into the future of the real estate market. And for some reason, it keeps on zooming out. It could be because their site is a little wonky. Let me come up here. There we go. And let's read it. Read the highlighted parts with me, all right, if you can. And it says, what's happening? JPMorgan, JPM, reported that third quarter home lending revenue plunged 34% from a year ago, and Wells Fargo logged a drop of 52%, even more, over the same period. The declines were due primarily to a spike in interest rates. At this point, we know why the slowdown came, right? It's the interest rates. And Morgan Stanley, Citibank, or Citigroup also reported that mortgage loans have gone up. And of course, we had to get an ad right now. So let me close that one down. Here we go. I've got the free version. So here we go. I'm coming to you from the free version, but let's take a look a little bit more here on this side if we want to read it. Home sales declined for the 7th month in a row, if you're keeping count, in August, and sales existing homes, which include single family homes, townhomes, condos, and co-ops, were down 19% from a year ago. So that's sales of existing homes, right? So that was down, very different things. So just pay attention to that. And that's according to the report of NAR. Home prices, and here, pay attention to this one because this is key. I'm going to shift out of this just to talk to you really quick because I think it's important. Home prices, it's a slightly different story, right? And not to say that nothing is going to happen there, but we have to be clear about what's happening between both things. And one is typically an indicator of what's going to happen to the other one. But still, check out home prices. This is real right here, so you can check it out with me. I'm going to shift this so you can read it with me. There it is. Home prices. This is in the blue if you're following with me. Home prices are still on the rise, but they're beginning to ease. Prices grew 15.8% in July from the year before. That's a smaller jump than 18.1% growth seen in June. According to the S&P CoreLogic Case-Shiller Index, which I'll put a link up to as well, the 2.3% point difference between those 2 months is the largest deceleration in the history index. Now, prices did come down just for this past month. It's not updated, but we saw the numbers. But it wasn't that big. And so the determining factor is going to continue to be the interest rates for mortgages, right? And if we continue to see that the rates remain high and continue to go up rather than come down to somewhere in the fives, then we're going to continue to see that effect go through the next few months. And thanks, Susie. I appreciate that, Susie. And I'll put that up there as well. So thank you. I'll leave that one up there. Now, if we dive in a little bit deeper as far as understand what's happening even further, and that's in the purple. So follow me on the purple. This isn't 2008, right? It's not 2008. It's very different, right? It just looks similar because that's what we can relate it to, because that's the last thing that happened. Market conditions are very different than they were in 2008. Analysts are telling home buyers and investors not to panic. But is it working? No, because we're still seeing people panic on YouTube, on TikTok, in real life, because some people are just born to panic. But here we go. And housing inventory remains low. That's the key, which prevents a crash in price as demand tempers. That to me is the key. That's the one thing you have to pay attention to. There was a housing shortage of around 5 million homes. I'm now reading in the yellow part. Before the onset of the pandemic, that shortage is not going away soon, said Lawrence Yun, chief economist of or with the National Association of Realtors, who we've spoken to in the past about this as well. So those are the key things you need to be paying attention to. And I can go through a lot more of this. I'll put both articles in the YouTube description section so you can see it, and the Case-Shiller Index article as well. But look, what do you think? Based on what you're seeing, what are your thoughts? What are your comments as to where we're heading? Because I like to see both sides of this. I like to see the optimistic side. I like to see like all the real estate market is going to hell. I like to see that side too. And then obviously I'm in the middle. I like to take a look at everything and say, well, where are we? Right? I always lean a little bit more towards being more optimistic because I always look for opportunities. But I want to know what you think. Tell me what's happening in your world and tell me what you're seeing that I may not be seeing. But from what I'm looking at, it's really too early to tell at all points. We are seeing prices go down, obviously, and it's going to continue to happen for the next few months. But a crash, I'm not seeing it. So let's see what you see out there. Thank you so much. Work is harder. That is definitely very true. If anything, you're looking at this and saying, well, where can I get more business as a real estate agent? You're looking to this that way. I would say look to the people that already love you, past clients, your sphere, social media. And if you're looking at this from a point of view of purchasing, right? Like if you're going to go in and purchase, take a look and say, hey, do I have to purchase right now? What is going to happen based on what I'm looking at? Get an amazing real estate agent to guide you in your specific area, because that's always important. They know those areas. This is very regional this time. Some people are going to come and tell you it's going to happen all around the United States. Well, it's not. It's not happening the same in all across the United States. This time, it's extremely regional. So pay attention to it. Thanks for tuning in. If you're watching on YouTube, subscribe. If you're watching on Facebook, just follow me. Have an awesome day.